Welcome everyone who is listening while we're doing this live or is going to listen later. I appreciate you tuning in to hear more about forward commitment. I'm joined with Maureen McCann from California. She's one of our co-founders and one of our wealth strategists with Spartan Invest. Thanks, Maureen, for joining us.
I wouldn't miss it, Lindsay. You kind of demanded it, so I had to be here, but just kidding.
I mean, tomato. No, so basically we wanted to jump in and really take questions. So when we offered this webinar to those that are interested in forward commitment, and we'll talk a little bit about that, we've got a ton of questions that are from all over. And the first question that people want to know, it's like, okay, well, wait a minute, there's a forward commitment out there that Spartan Invest is offering to investors that we can get a 5.99% interest rate. This is a scam. There's something wrong with this, et cetera, et cetera. So we're here just to address all of those questions. And I've got a list of questions that have all been submitted from people interested in hearing about it prior to. So Maureen, I'm just going to let you say, hey, high level, what is a forward commitment? Just really quick.
It's very simple, guys. The forward commitment is the ability of a home builder, which is what we are, to be able to buy down an interest rate for much more than an individual investor could do. The federal government regulates because they don't want borrowers being overcharged. And so they regulate the number of points an individual investor can buy down. But they do not limit the number of points that a home builder could buy down. And very simply, if you guys in your neighborhoods, if you see new home builders releasing new homes and they're offering incentives, to move the properties, then you'll see things like, we'll offer you $20,000 for closing costs or upgrades. That is part of what they can do. They can also buy down the interest rate as well. And so it's been around for a really long time. This may be something that you guys haven't heard of, but it's something that we decided to capitalize on simply because over the last 2 years on the receiving end of the phone call, I've been listening to a lot of investors just ask, they're like, I'm going to wait until the interest rates come down. And if you've been waiting for 2 years, right? And we might be waiting longer. We don't know. And so one of the strategies that we implemented was, let's just bring the rate down for our investors. And that's exactly what we did. So we were able to buy down a large sum of money for 10 points, something that you guys would not be able to do individually. And that's how we're able to offer you a 30-year fixed, 20% down, no gimmicks, no balloon payment, no scam, just a traditional Fannie Freddie 30-year fixed mortgage note at 5.99%.
Yeah. And I think that that's a really good point. One that we didn't think about when we were putting together a lot of marketing and how we get in front of investors. And we're trying to get as much information out there. You and I talked a little bit about this on our podcast. We're really pushing the information out there, not to shove it in your face like, hey, get this, like a sales tactic or anything like that. It's because we had so many investors that missed the first round. Yeah. And that were really upset that they missed the first round, right? So we're trying to get ahead of that a little bit and make sure that those that are interested can capitalize, but addressing the fact that this has been around for a really long time. That this is not new. This is not something that is going to change. This has been around, and home builders have been taking advantage of this for years and years and years. And lenders have just now, due to the interest rate spikes, lenders are now making it available for just large home sellers, not necessarily just the builder side. So I think that that's a pretty important distinction when you're looking at the viability of using a forward commitment. Is that this is not a new program or anything like that. So can you use this? I mean, so we just said that builders have been doing it, but Spartan Invest both offers new construction and renovated properties. Can you use this 5.99 on either of those type of homes?
That is a big resounding yes, you can.
So now how long is the forward commitment 5.99%? How long is that locked?
It is locked for 60 days, right? So we have the option as buying down the rate. We can buy it down for 30 days, 60 days. Heck, we could buy it down for the entire year. But the longer we want to buy down that rate, the more mucho dinero it costs, right? So what we figured out was, and why we did the first forward commitment in Q3, was we needed to have enough properties ready, completed, that would be able to close in that first 60-day lock period that we tested it out. We wanted to see, hey, does it work? Is it attracting investors who were sidelining themselves for a while? And it really did, you guys. And so that's why we decided we were going to do it again. And I will tell you that most other companies are not doing this because you have to think about it. Most turnkey operators, there's only really a handful of us, most of them use private money to operate their company, right? Which they're paying 9 to 12% usually to run business operations. Conversely, we don't use hard money. We have a bank line of credit that allows us more room and more flexibility to offer a marketing strategy like this to you.
Absolutely. No, that's a really good point. So that brings to another question in that got submitted. So are we baking in the price of this increase? So it is marketing. We did have to pay for it up front. There's a lot of risk. That's another reason why a lot of other turnkey providers aren't necessarily able to offer something like this, is because it does have to be purchased upfront with cash. Right. So that's quite a risk for us. But do we bake that in? Is that in the cost of the property? Talk a little bit about where does this money go?
Yeah. So what's nice to know, you guys, is that yes, we do bake in 50% of our cost, not 100% of our cost. So just for an example, to take one of our properties and to buy down the rate from 8.5% today to 5.99, that could be around $14,000. So, right, if you wanted to do this yourself, which you really can't, but if you wanted to, you would not only have to come up with your 20% down payment, then you'd have to buy down the rate for another $14,000, and your closing costs. So what we were able to do, because we think it's fair, is to split the cost with the investor. So what you'll see is we'll increase the price on average about $7,000, which, when you look at the out of pocket on a percent down, 20% payment, it's not a big amount at all to lock into that very low rate for 30 years.
So our average forward commitment for our properties, and we're taking averages here, right? Because we've got our average sale price is right at $165,000. It cost about $14,000 per property to get the rate that low. So yeah, we've split it. We take the 7,000 off, kind of off the bottom line, and then increase the purchase price $7,000, which of course you're paying 20% on that additional 7,000 out of pocket, which is really just not that much. I can't math that in my head, but I'm sure it's not that much.
It really, well, when you compare it to trying to come up with $14,000 yourself, in addition to buy down your rate, you're like, no, it's such a small amount, and worth it, right? Because we don't know where the rates are, or they're good. I mean, we know where they are today, but we just don't know where they're going. And, the opportunity cost is we're missing, us as we investors, if we're going to sit on the sideline, for 2 years, like some of my clients who I've talked to, waiting, it's like, well, you're missing out on, the 5 to 6% appreciation in our markets. You're missing out on the cash flow. Maybe it's not exactly as high as you want it, but you're still missing out on it. You're missing out on the rent increases. You're missing out on the depreciation that you can take. You're missing out on the renter paying down your principal and improving your equity accrual. So, there's other ways to look at, investing in real estate. And the name of the game is to beat inflation, and that's how you build wealth. And so, you can definitely park your money in a 5% CD, for a certain amount of time, but that's only 5%, where you can actually earn double digit when you look at the multiple ways.
Absolutely. Absolutely. So is this rate tied to a specific institution?
No, we actually have, we're good like this, where we like to have our lenders compete for our business, right? So we do have two very, very, very good lenders who we've been working with for years, who deliver excellent customer service. They get the job done. They communicate well. They are excellent lending partners for our investors. And so there are two that you get to choose from.
That's awesome. Yeah, definitely the having the diversity is very beneficial. Especially because we've got several clients too that have worked with any one of these lenders for a really long time.
Mhm.
Now this is a really common question, man. I wish I could say yes, but so can you use the rate on a different property and then maybe have like ARP or Atlas Rental Property manage that property?
I don't think so. I've gotten questions too, like, "Hey, can I use this to buy my primary? Can I use your lending to buy a primary residence?" I'm like, "No, it's just for our It's just for our rental properties, right? Because Spartan bought down the rate with our two lenders, and so it's specifically just for the acquisition of an investment property through Spartan."
Right. So that loan amount, so you buy it down based on the loan amount. So if that loan amount isn't hit on the amount that you have allocated or that you're selling, then if it doesn't get utilized, you lose it and
Mhm.
stuff. So ensuring that that amount is based on the properties that are in the Spartan Invest loan commitment 100%. I wish we could. I wish we could buy it down and then offer it to more people. That would be great. That would be a great way to facilitate this real estate market right now. But unfortunately, we can't.
Wah, wah, wah. Sorry.
Uh, I know, I know. And I think that you talked a little bit about this, but are investors able to come to the table and buy them down even more?
Mhm. They can. Yeah. So, that's even another. So if you're looking to get lower than 5.99, we're giving you a great base to start from. And if you want to buy it down more and kick down a few grand to get it down to a lower rate, you are more than welcome to do that too.
Ah, that's great. And this question right here. So while I don't think that we live in the world where we're ever going to see 3-4% mortgage rates, at least not in our lifetime, unless there's another global pandemic that happens, which I genuinely hope that there's not. But if the rates do fall in the future, if they fall substantially and it falls below 5.99 for like an investor conventional loan, could we refinance these particular properties?
The individuals can. Heck yeah, they can. All day long.
Yep, there's nothing different than this type of loan is not different at all than any kind of other conventional loan that you have, where the ability to sell, refinance, or still lock in that 30-year rate. Absolutely.
And one thing to note is that one of our lender partners, they are offering if you were to refinance, they did give me a 2-year period, but then, Alex was like, yeah, well, it could be for whenever, right? So I think it's a little loosey-goosey there, but one of our lender partners, they are offering a no-cost refinance if you originate with them.
Yeah, man, that's huge because that's thousands of dollars. That's a year's worth of cash flow gone if you do decide to refinance in a few years.
Exactly.
Yeah,
So
that's
use
great.
the connections, use our network, leverage us. We have people that can help.
So additional fees, like what else is the investor looking at coming to the table with? What additional fees are they going to face?
Just your closing costs, right? If your closing costs, and if you want to buy additional points down, the lender could tell you what that would cost and what the rate you could get. But just, you're launching off from a 5.99 platform, diving into a pool of whatever interest rate you want, you can choose. So really, it's just closing costs, and if you choose to buy down additional points.
So how do investors see the properties that are available through this forward commitment with Spartan Invest?
So we have our inventory link, our inventory page with link and password we can send to you. They're also on our website. You can check it out at spartaninvest.com. And all of the properties that are listed are part of the forward commitment. There's none that are ineligible. They are all eligible. So whether you're looking at $127,000 property or an 800,000, where's that come from? 180,000. That's what I was trying to say, and I got scrambled in my brain. or, our new construction, which is a 240 to 255, all of it's included. So it's just, there's something for everyone. It's just a matter of finding the right one for you.
And the prices on our website, they do already include that $7,000 increase.
They do. Yes.
Absolutely. That's awesome. So what other, we're talking to investors every day about this. We've had a lot of traffic come through wanting to learn more. Hence, this is why we're offering this. And if anybody has any questions that they would like to put in the chat, please feel free to do so. But what are the biggest questions that you see as well? I mean, that's a lot of questions that we got sent to us prior to, but you're kind of in the trenches with investors, talking about this forward commitment, going through some obstacles with them. What are the questions that you're seeing?
Yeah, so there's definitely some skepticism because people just don't believe, if you're following Bankrate and you're looking at what the current mortgage interest rates are in the 30-year fixed, even for a primary homeowner, you're looking in the mid 7s. You always go a point higher for investors, so you're looking at 8 to mid 8. And when they see something like 5.99, they just don't believe you. So I'm met with a lot of skepticism. And the questions that come up are, is this a gimmick? Is this a balloon payment? Is it a variable rate? Is there a prepayment penalty? Things like that. And all of those are not true. It really is just straightforward, conventional, 30-year fix, Fannie Freddie, no joke. Conventional loan. So it's just that skepticism, because I get it. It's like we haven't seen a 5.99 in 2 years, right? But that's actually if you look actually at interest rates, we're in a normal 5.99 is a normal it's the normalized interest rate where they have been for a really long time. But we were also spoiled for a really long time. We went our 3 and 4%. Wow. But we don't have that right now. So this was just an opportunity for us to be able to bring a low interest rate with no gimmicks, no joke, to our investors.
Absolutely. And what's so crazy too is that the interest rate that we're at now, we're at 8.125 roughly on average, is still not high. It's high since 2008. And we saw that, that really held a firm grip on lower interest rates for years and years, just trying to kickstart the real estate market back. But 8% is just historically not that high, but it's astronomically high to us, who lived in that 6.5%, then COVID and lived in the 3-4%. So it really hurts. And so this is just honestly our way to allow investors a chance to get into properties and realize all of those benefits of real estate at a reasonable interest rate. Anything else you want to add, Maureen?
No, I think that you kind of use the word wait there, and it's stuck in my mind. It's like, don't wait to buy real estate and wait. And and just think about it, guys. I like what Warren Buffett said. He said the 30-year fixed mortgage is a one-way bet, and you win either way, right? So if you lock in at 5.99 today and the interest rates go up, you're safe. You win. And if they go down, you below 5.99 to 5 or whatever it is, you can refinance and you win. So it's just locking that fixed rate mortgage in place. And what better opportunity than to not borrow within the current interest rate market, but find a company, team up with the company, partner with them who is doing right by you, by offering the low rate. So.
Yeah. And the inventory that we're able to get into purchase right now, I think speaks a lot to the competitiveness that was a couple of years ago, that there were all of, hedge funds across the country, and they're just gobbling up properties left and right. And it drove the prices up just like the low interest rates did. And now that the competition has subsided in a lot of our markets, foreclosures are starting to take place again. And please don't take that as I'm excited that people are getting foreclosed on. However, it's just a normal part of the real estate market. Those properties are able to be acquired and renovated by companies like Spartan Invest and offered to investors at a much more affordable rate and better areas, et cetera, et cetera. So just a lot of the obstacles that we've seen to deliver a better product have kind of moved out of the way. And now we've got this coupled with a lower interest rate.
Yeah, and it really makes it an advantageous market to invest, to buy, because, usually you'll see, Lindsay, you and I saw it, we experienced it. And guys, this is no joke. We would actually, when the interest rates were artificially low, right? Even in the 3%, we could not even keep inventory in stock. And we would actually have a timer to see how, like when we list a property, to see how fast it would sell. And it would, some were seconds, right? You'd put it up and it would be like, oh, there we go. There's the winner today, it was in seconds. And so where we are now is that we don't have that crazy frenetic frenzy where you feel like if you see something, you just have to grab it because it's going to be gone in seconds, literally. You now have an opportunity to look at a healthy inventory of better quality properties at a lower rate than the average market right now, with a company like us to secure an asset that is going to produce revenue streams in multiple ways. And so, I love it when I talk to some of these investors and they get it. They're like, oh yeah, all the competition, they're out of the way. And now I'm just buying, I've got the pick of the litter and I can do, I was like, bravo, you got it.
Yeah, absolutely. We've definitely seen a lot of savvy investors take full advantage. So, all right, Maureen, thank you so much for jumping on and answering a lot of these questions. I know that there's been a lot, and you're probably still going to field some more that we didn't think of or that someone didn't submit earlier. But thank you for jumping on and talking with everyone today.